Welcome back to the Money and Meaning podcast, where we go beyond the numbers so you can worry less and live more. I'm Damon Latanzi, and I'm here with Erica Wright from South Shore Retirement Services. Thank you so much for being with us today. Today's topic, Eric, which we're going to talk about, is that I think a lot of people think that as they get more money, things get simpler in some ways, right? I don't have to worry about running out of money. I've got more than enough for my life. But what we find with our clients is that it actually gets more complicated and more complex.
Right. When you have more money, you eliminate that whole worry of, am I going to be able to pay my mortgage payment this month or pay my car payment this month, which it's nice to eliminate those worries.
Yes.
When you get to a certain magic number, like I think people always have a magic number they want in their heads, and they think that once they reach that number, no more worries. And that's not the case. Like more complexity, more worry about taxes and all sorts of things.
Right. And in a lot of ways, there's more at stake, right? A mistake, if you have very little money, might mean, okay, it costs you just a little bit. But if you have millions and millions of dollars, which of course some people are fortunate enough to have, and many of our clients do, those mistakes get amplified. Like, a tax mistake might end up costing hundreds of thousands of dollars versus thousands of dollars. And I think regardless of how much money anyone has, there's things they want to do. There's people they would rather have get that money, or charities. I mean, most of us don't want to see large chunks of money go to Uncle Sam unnecessarily because we didn't plan properly.
Right. So this is such a huge topic that it's kind of hard to break it down in 8 to 10 minutes or however long this is going to be. But let's just kind of dig into what we can as far as one of the first things is tax planning and tax strategy. Right. How does that change when you have a more complex portfolio or more money?
Right. I think most people are just thinking about income taxes. What do I have to pay during my life for the income that I generate? But as you get wealthier, of course, income taxes do get bigger, but you're also concerned about estate taxes. Well, what happens if I pass this asset on or this asset on to kids or charities? And how do I start to arrange things really to maximize how much might go to my family or to charity, as it were? And I think the other thing to think about is, because you have more money, there's probably more advisors involved, right? There might be financial advisors like us. You might have a tax advisor. You might have an attorney. And you start to get into issues of how are you best coordinating amongst all these different professionals who might each have their own agenda.
Right. You brought up attorneys too, and I think it's really important. Making sure that your legal work is up to date is a huge thing. You might have, old IRAs or 401ks sitting around that you haven't ever consolidated, and making sure the beneficiaries are listed properly. And if you have a trust now that you didn't have 15 years ago, making sure that the trust is listed as a beneficiary if that's how you want it done, which makes sense.
Right. And things change, right? Maybe when you got married, 30 or 40 years ago, obviously your family was a lot smaller, and now you've had kids, and maybe your kids have had kids. And so you've got this sort of expanding family situation. And every time that changes, whether it's births or marriages or divorces, it's worth looking at your estate plan to make sure that, does this accurately reflect what I want to have happen if something happens to us?
And when you're looking at a bigger portfolio, oftentimes you have different asset types that are in there, and not just an IRA or a brokerage account. Sometimes you have property. Sometimes you have part ownership in a company. And just incorporating all of those into the portfolio and the design of what you have is really important.
Right. A lot of people we see, maybe they worked one job for 30 or 40 years and they had a 401k, and that becomes an IRA, and maybe they have a bank account with some money in it, and that's it. But our higher net worth clients, to your point, they might have multiple brokerage accounts, or they might have, even within those various accounts, highly appreciated stock or some large position in a company. We see that a lot. I can think of a client who's got many millions of dollars in one particular stock, and that creates opportunities, but also challenges inside a portfolio. So what people might have on a smaller scale, right? People that are getting up the higher net worth have these problems sort of amplified on a bigger scale. And the more accounts you have, and the bigger your family is, and the more complicated your situation is, I think the more time and attention you need to give to making sure that you have a plan.
Right. One of the things when you talk about asset types that I think people overlook often is life insurance, and using that as not necessarily an income replacement tool, but using it as an asset type in retirement or in your overall portfolio. And it's a lot of what wealthy people include in their portfolios.
Right. I think you raise an interesting point. If you look at sort of the key areas, you got your investments. You want to make sure you have a plan around that. We talked a little bit about taxes. And then for most people who have significant assets, you're exactly right. They're concerned not about how do I spend all this money during my lifetime, but how do I maximize what I leave behind? And life insurance as an asset class can be a great tool to do that. But you've got tax considerations. You've got, okay, what accounts do we fund that out of? So I think people Erica, we see this a lot, think in silos. Oh, my investment plan, and then I've got this
Right.
separate tax thing, this separate legacy plan, and it really isn't like that. It's got to be all
Right.
married together, because if one piece is off, then you're not being efficient, or you're not doing as much as you could than if you had a coordinated plan, as it were.
I think that's important to mention. That's why I think it's so great that we do everything in-house and take care of everything. Like, we kind of quarterback the planning and the strategy, and it makes things, I think, a lot easier for a lot of people.
Definitely. You know how it is when you sit in a meeting with someone, you're at your doctor's office, and they ask you, do you have any questions? And you're like, no, I don't have any questions. And as soon as you leave,
Right.
you're like, I didn't understand anything that he or she was saying, and I have all these questions. And if you have to go to 5 different professionals to explain yourself all over again, you run the risk of something getting lost in translation, and that something getting lost might then show up as, oh, geez, we really missed this thing, and it cost us $300,000 in taxes that we shouldn't have paid. And I think, to your point of getting it done through one point of entry, really makes it a simpler process and also a more complete process.
Yeah, I agree. Yeah, one of the things we've been getting a lot of questions about is this one big beautiful bill,
Right.
And how does that impact people? And it really does. I had somebody in here the other day who were doing some insurance planning. They have a couple of pensions, and they're like, well, we really want to stay under that $150,000 threshold. And it's an interesting driver that's coming into conversations now, and just understanding the impact, I think, is important.
Yeah, and I think there was a lot of changes in that bill, and as they play out over the course of this year and the years to come, it'll become clearer what all the different planning opportunities are. I mean, we have a pretty good handle on what we think we can use with our clients, but to your point, the sound bites you hear on the news might say, oh, Social Security is not taxed anymore. It's like, well, that's really not true. It's because of this mechanic or that mechanic. So I think the sound bites are great, and it gives people an idea, but really you've got to work with someone that understands at a deep level what these changes are. How will they impact me? Should I even worry about this change or that change? If you're very high up the net worth scale, then you do have some relief around the estate tax exemption levels, right? Those are staying at the elevated levels that they were under the prior tax cuts. They might not be like that forever. So maybe there's a window of time for certain couples or families to take advantage of these opportunities. But, we see this a lot. It's easy to procrastinate.
Oh, yeah.
Right. And doing nothing is a plan unto itself. But if you do nothing, then you're liable to sort of, what happens will happen, and that's not likely to be the best thing.
Right. And once you hit that event or something that happens, you can't go back and say, dang it, I wish I had it done.
Right.
It's tough.
Right. And that could be something like you missed a calendar year and then you can't take advantage of the taxing. Or it could be husband and wife are married and husband passes away and then you missed a planning opportunity there. And there's all different things that are happening in life all the time, and it's easy to miss those opportunities. And I think we really see our job as making sure that our clients don't miss those opportunities, and that we at least say, hey, here's a thing we should be doing this year. Let's get it done, and here's the impact, et cetera, and how it will benefit them.
Right. I think the most important thing, like you mentioned, all the sound bites, is just getting people talking about this stuff and acknowledging it. And the more people talk about it, the more people realize that they don't have all the answers and they do need help, and that's what we're here for.
Definitely. Erica, as you know, every month when we do the podcast, we make available a guide, and this month's guide is called The Greatest Gift. It's all about legacy planning, and really, it is a gift to have more money than you need during your lifetime. And this guide really talks about some of the ways that people might approach creating a legacy and giving money to their family, whether it's while they're alive or after they pass away.
Yeah, I think The Greatest Gift, it's called that for a reason.
Right.
And it is. Money changes people, and money can change family dynamics when somebody passes away. And I think that's something that gets oftentimes overlooked in a planning process too, is how is the emotional aspect of all of this money and all of this gift that we're giving people going to impact the dynamic.
Absolutely. It's easy to talk about the numbers and this tax law change and that tax law change. But at the end of the day, you're absolutely right. These are real people, and life doesn't happen on a spreadsheet. And, we're not saying you have to tell your kids and your family exactly how much money you have, but it can be helpful to go through what your thinking is. And, hey, here's our plan, because once you pass away, they're sort of just left with a document that is maybe colder than you had thought it was going to sound, and why you're giving this child more money than that child, or why charity is getting it. I think you don't want your legacy to be one of, like you said, fighting or confusion or family strife. You really want, they don't have to agree with what you did, but to understand why and the benefit of doing that. And I think we can help provide some guidance and, sort of talking points around here's how you might approach that conversation.
Right. One of the things, just a little tidbit that I used to tell people when I dealt with military funeral service all the time, and we would tell people all the time to leave a note, like just leave a note with your legacy plan or your estate plan, and that oftentimes softens the conversation around all of it in general.
It's a great idea. I mean, a trust is sort of like legalese type language, and the note can be really more of a personal, communication from mom or dad to the family, right? And I think that's really a good idea. And I think those little ideas and those things that really help humanize the process are what people are looking for. Sure, they want the strategies, but at the end of the day, they want this money that they have to benefit them, benefit their family, and change the world or change their family in a better way.
Right. One of the other things, talking about your family having an understanding of what you have in your portfolio, is brings up the question of, what do I do when I'm alive versus what do I wait for until I've gone and I can't see the benefits of the money that I gave to my kids. One of the things we talk about when you talk about the gift and the legacy is people that want to see the money that they have, in action with their kids. They don't want to wait until they pass away to give money away.
Right. I think about my own parents, and for years and years and years, they took our family, my wife and my two kids, on a big trip, because that's a memory, right? I mean, it's lovely to inherit money when you die, but it's a lot more impactful to see the benefit of that money while you're alive. To your point, that could be great trips. It could be helping to pay for college. It could be helping with a down payment on a house. There's so many ways that families can help their kids and grandkids while they're alive. And I think if you're not worried about having enough for yourself, the question becomes, to your point, of, okay, well, what can we do while we're all alive to create these family memories and these family bonds, versus, hey, we'll just leave them a pile of money when we die. I mean, listen, people will take whatever money they inherit, but that's a whole different landscape. But there's different tax considerations, different investment considerations, different legal and estate planning considerations if you're going to give money while you're alive versus when you're dead, right?
Right. We see a lot of people now who are in their 50s and 60s and whose parents are still around. And it's like, when you get to your 50s and 60s, usually your kids are grown and out of the house, and that financial struggle is past you. So it would be really nice to just be able to make those resources available when you're around.
Well, that's a wrap for today's podcast. Remember, in the links down below, you can click to set up a time to meet with us, whether that's a 15-minute introductory call or to come down into our office for a meeting. We'd love to see you down here or talk to you on the phone, answer your questions, address your concerns. Or you can visit our website at southshoreretirementservices.com, and you can do all those same things, including registering for a live event or setting up a time to chat with us. We also have a giveaway this month. It's around estate planning, a complimentary white paper that's got some great tips and ideas and strategies around how you can approach, giving assets away and just making sure that your estate plan is really the best it can be. It's called The Greatest Gift. I'd strongly encourage you to click the link and download that as well. Thank you so much for being with us on the Money and Meaning podcast. Hope to see you here back again real soon.